Welcome to this week's live ASX strategy session. Great to have you with me. Great to be here to talk about some charts. Lots of stuff to go through today with the ASX 200, some things moving in the commodities, got a couple of stocks to have a look at. So all in all, I think we've got a bit to go through. As always, everything today is general commentary only. Doesn't take your personal situation into account. Having been through all that, I think we will get straight into our first chart for the week. So let's start here with the ASX 200. And this is a fascinating tug-of-war which is going on. And it's a tug-of-war because we really have two sides in play. We have the investors who are buying and those who are selling. And I think there's a big move in the making. I don't know which way it's going to be. We'll go through some stuff which might help with that in a moment. But I think there is something big building. And the best part of this, I think, is that we have some quite clear levels to watch. So the main focus point on this chart is this distinctive trading range. And it started forming back in May, back at the May high. So we're really 3 months into this trading range as we speak. And you can see the price is really starting to coil up inside and it continues to compress. And you can see that with these converging lines that mark out the upper and lower boundaries of the range. Now, it had another rally off the low end of the range just yesterday. Prices broke down and it actually looked like they may actually break to the downside yesterday before we got a strong rebound later in the day and took the prices higher again. It was also interesting, the rally also came off around this 100-day moving average. So as I typically do, I've got the 50 and the 100-day moving averages. I think they're useful averages when you're looking for medium-term trends, trying to look for the overall direction of a market. They take a lot of the noise out and they can be quite good for looking at those medium-term perspectives. So nice rally off the 100-day moving average as well. Now, I just want to clear this chart up a little bit. I'm just going to remove this horizontal support, which we've had there for a couple of months probably now. It was useful earlier on, but now we're really starting to compress. I don't think it's helping so much. I just want to focus on some key levels and just remove what's become clutter. So we don't need that. That's just a distraction. And something I say always, if you like your charts and you do your own analysis, try and keep your charts nice and clean. If something's not really helping, probably best taking it off so it doesn't distract your focus from what really matters. So getting back to yesterday's rebound off the lower end of the range, I was actually a bit surprised at how strong it was to be threatening to break lower early in the day to close the day up in the upper half of the range. That was a really strong rebound. Now we can see this better if I jump over to an hourly chart. So of course I've got the daily bar chart here and you can see the D for daily. Let's just switch that and let's go to an hourly. Hourlies are interesting sometimes because they just give you some finer details. So in a daily chart, you've got all the action in one bar. You go to an hourly chart and the day's action is in like a number of bars. So you just get that detail which you don't get on the daily. And you can see the fall, you see the decline into it. So the decline was really getting some momentum up. And we got to the lower end of the range and we've had this V-shaped recovery. It's interesting when I compress this a bit, and you see it's not the first V-shaped recovery we've had in this whilst we've been in this range. You can see there was another one back in May, late May, sold off hard, rebounded pretty much as at the same sort of rate that it came down. We had another one back in early May. You could also say at the start of the range in April, we had another one. So that's interesting. That's interesting because you can see there's this significant or this large interest in buying the dip. Every time we come back down, there's an aggressive buying of the market, and we've seen it again yesterday. So I think this is a positive. It's a positive that these dips are being bought, and it's also encouraging to see these powerful rallies coming off the lower end of the range. So that makes me cautiously optimistic that this range can resolve to the upside. So I'm just going to come back to our daily chart. Just come back to our daily chart. So yeah, this buying we're seeing off the lows, I think that's encouraging. But until this range breaks, we can't be sure it is going to be to the top side. We just don't know. A range is a range, and it stays a range until it breaks, and you don't know for sure which way it's going to be. I think that we've also got to bear in mind the ASX 200 still encountering resistance, still encountering resistance at the top of the range. Every time we get near the top, there does seem to be supply that comes in, pushes the market lower. While there's certainly interest in buying, there's also interest in selling. So that's why I say it's we don't have a breakout to the top side until it actually happens. I think the risk factor to be aware of is that if this does in fact break to the downside. So we've always got to think of different scenarios. It's not just going with our favorite scenario and that's all that can happen. Maybe it doesn't break to the top side. So we've got to be aware that if this strong buying, which has underpinned every pullback, if that strong buying was to dry up and prices come back and retest this low point from yesterday, it does open the possibility that we do get a sell-off that could take the market back towards the April low. So that's just something to be aware of, because that's just how these ranges work. When one side gets overrun, whether it gets overrun to the top side or overrun to the downside, it often does lead to a surge in momentum in the direction of the break. So we just need to bear that in mind. Need to bear in mind that have a plan. It's like having a plan. If things don't work out to the upside, have a plan should they go to the downside. I think that the levels to watch are the June high. So just really from the last or this week, the June high from this week, and also marginally higher earlier in the month, then also the May high. If we see the ASX 200 get above this little cluster of resistance points here, so we're really talking about 7,900 thereabouts. That would be enough, I think, to take it through the March high as well. And then we potentially get that breakout. We get that trending momentum coming back to the upside. So I think that's where we want to watch on the upside. On the downside, I think it's yesterday's low. I think a break of yesterday's low, if that buying doesn't quickly come back in, it really does open the possibility that you get a wave of selling that can push the market down towards where this range has its lowest point. So it's out of the range and then starting to decline. So I think they're the things to watch for. I favour the upside. I'm going to give the benefit of the doubt to the underlying trend from the October low. So when we step back and look at this, for me, the underlying trend is to the top side. We have a consolidation, and then favouring that underlying momentum from the October low, you'd say, well, odds would favour a break to the top side. But as I say, there are no sure things. Know what your risk is, and also we should also always prepare to be wrong, because that's going to happen a lot of times when we're investing, when we're trading in markets. A lot of our ideas won't play out, and just be a little bit wrong when you're wrong. And when you're right, well, we want to be a lot right. And we do that by letting profits run and cutting losses. So for me, those stop losses on my new positions and the trailing stops on my profitable positions, that's the key to playing this whole strategy and this whole market situation out. I want to stay in my best stocks as long as the price action justifies staying in them. But if my stocks start breaking down, start hitting my exit levels, then I've got a plan to sell and protect capital. Protecting capital is so important when things don't play out. We're just in this period of uncertainty, this period of where, it's a holding pattern between the next bullish phase or the next bearish phase. Got to wait and see which way the market plays the cards. Now, if you're getting some value from this, please hit that like button and leave a short comment. Just, hey, thanks for the video. Helps a lot. YouTube shows other people, all that sort of stuff. And yeah, that helps me. Hit the subscribe button if you're not subscribing to the YouTube channel, and just be part of that. That would be fantastic. And now I'm going to move on to the small ordinaries in a moment. Some interesting things I want to look at there. Of course, I've got the commodities, couple of stocks. So there's quite a bit of interesting stuff to go through, but of course that wraps up the free section. So if you're not a strategy session member, there's a link below. This is different to being a YouTube subscriber. YouTube subscriber sorts you out on YouTube, but to be a strategy session member and get the rest of the content, there's a link below. Click that. Costs you very little, and hopefully you get a whole lot of value from the small amount of money you pay, like buying me a cup of coffee kind of for preparing all of this for you. So think of doing that. I'd love to have you on board for the rest of the session. Now, having said that, let's move on. Let's move on to the small ordinaries.